Alright guys, how you guys doing? So today we're going to start talking about how to become a consistent trader. So let's have a look here. First thing you need to know about becoming a consistent trader. Alright guys, how you guys doing? So today we're going to start talking about first thing you need to know about becoming a consistent trader is knowing simple fundamental rules. Okay, so fundamental rules are what is a market, what's going on in the market, how are you going to make money as a trader, right? So a lot of people they really get confused in the market in the sense that they start to think about that they want to make money really fast. Okay, so first rule of thumb is you're not going to become an instant millionaire. Okay, you're not going to do that. It's gonna take years of practice, and it's gonna require a lot of patience and perseverance for you to get through this journey. Okay, that's the number one thing that you have to kind of realize. Okay. And the other part is a lot of people don't, I guess,
Market in the
understand
sense that they start
what's going to happen here, right? So what you want to see or what you want to look at is the market trends, like what is going on. You really want to understand by looking at the market trends, what's going on with the market, and how you can benefit from that. So first thing you have to realize is the market moves in cycles. Okay, so this is a S&P 500. This is the ETF. If you're not aware of what is the ETF, there's a great resource online that is for free to understanding what ETFs are. It's called, or a lot of investment information actually. It's investopedia.com. So Investopedia has a lot of great tools and information, and you can learn really a lot. It's a free resource. Okay, if you're not really into looking into books and all those different things, you can start to use Investopedia.com. Great resource. You go into their academy, trading for beginners, technical analysis, whatever you would like to do. It's a great resource. I highly recommend it. And so to becoming a consistent trader, you have to first of all understand what is a market. So a market is something that is comprised of indexes, right? So we got S&P 500, we got triple Qs, we have Dow Jones, and we have IWM, which is small caps. So all these different indexes that we see right here, they are comprised with a basket of stocks. Okay, so now you have to understand if I'm looking at the S&P 500 now, you guys might hear in the news that oh the S&P 500 is going up. Okay, what does that even mean? Like for a beginner, what is that? Like what does that mean to me as an investor or as a trader? So Yahoo Finance is another great source where you can put in SPY, which is represents S&P 500. Okay, and you'll get this ETF that comes up. And if you see S&P 500 going up, they're talking about the S&P 500 index, right? Now, what is in that index? You can look at holdings, and it tells you what sectors. So sector is like stocks or companies listed under certain sectors, right? So you have technology companies, which is like tech stocks, industrial, and energy, right? So if we see S&P 500 going up, we want to know what companies are comprised of the S&P 500. So this gives you the top 10 holdings. So this makes up 27% of the total S&P 500 index, right? So on and this Apple, Microsoft, Amazon, Facebook, Google, Berkshire Hathaway, Tesla, Nvidia, and JP Morgan Chase, right? So if I know the S&P 500 is going up, I'm going to look at these companies that possible that they could start moving with the S&P 500 as well. Now, this part is important to pay attention to, where it says percentage of assets. So this is how much each individual stock represent of the S&P 500. Why is this important? Well, this is a trick a day trader can use. Because a trick is if the S&P 500, especially in this current market, is very volatile, whether the stock goes up or down, whether the S&P 500 goes aggressively up or aggressively down, we know that these top three stocks can move very, very aggressively. Okay, just by looking at this because they're weighted heavily. So that means they're really influenced and they're heavily relied on by the S&P 500. Okay, so next up, we can look at this Yahoo Finance makes it easier. You can jump over to the triple Qs and look at the tech stocks and see what the performance was, and then go under holdings and see what makes up this index, right? So if triple Q is falling, well, 50% of the index or the 50% of the triple Qs are Apple, Microsoft, Amazon, right? So these are all different, different stocks that are made up of the triple Qs here, right? So going forward now, right? These tools you have under your belt by looking at the now you sort of understand what triple Qs, S&P 500 are, right? So now with that information in mind, can you really start making money right away? No, you can't, right? So in order to become a consistent trader, you have to realize second part, okay? The second part is the technicals of what's going on with the stock, okay? So what is a technical? Technical analysis, or as we call it, is a study of price based on where the stock has been in the past, okay? So if we look at this is a chart of S&P 500, okay? So a chart consists of two things. You got price here and you got time here. Okay, that's all you need to focus for now. Okay, so looking at this chart, this is the S&P 500. Okay, everything moves in the world with supply and demand. So in order to become a consistent trader, you have to just simplify and just think of that. Everything is based on supply and demand. If supply is high, if the supply is high and the demand is low, the price of anything would come down, right? If the demand is high but the supply is low, then the price rises, right? That is a simple trick to mastering the stock market. So whenever you're looking at a stock, let's just say, we're looking at Tesla here, right? If we're looking at this time frame, right? So if we're looking at this chart right here, we're going to talk about different time frames as well. If we're looking at this chart right here, we're going to see so many different things. We're going to see price. Okay, we're going to see Tesla as of May 20th, 2020 was in this price right here, right? 146.80, 146.81. Okay, and now Tesla is trading around $800. So obviously you're gonna say, if I bought Tesla here, I could have made money. Well, yeah, for sure. But how do you know that Tesla was gonna go up there, right? So first thing that you really have to understand is what this represents. This chart that I'm looking at is a candlestick. So these are Japanese candlesticks. This is the chart that I use, right? So this candlestick has two things that you need to know. It has a body, and it has wicks. Okay, so what the body represents, especially if you see on an up day or a green day, what the body represents is the opening and the closing of the price. The wick represents the range. Okay, that's all you need to know. So on an opening day or on a day that the price moved higher, so on this day, Tesla went from 254 all the way to right here, 274 in one day. And you see these little wicks popping out. That was the high of the day at 276, and the low of the day was 253. Okay, so once again, opening and closing, and the wicks represent the range. So on a red day like this is a red day, price opened at here 281, and it closed at 272. And the high of the day on here was 283. Low of the day was 262. Okay, so now this is just simple understanding of what a candlestick is, and so you kind of know, right? So and each candlestick here, because I'm on the daily time frame, represents one day of price movement. If I switch this over to the 5-minute interval, these are going to represent 5 minutes of trading. Okay, so if I switch it over to the 15 or something, let's say I switch it over to 50 minutes time frame. If I switch it over to 65, that's a 65-minute time frame. So you can change it, right? So what we're going to talk about today, you can apply to any time frame that you would like. All right. So let's just have a look at that. So how do you make money? How do you know that Tesla that day, if you bought it at 200 and some dollars, was going to go up? So there's a simple concept of supply and demand that we've talked about. And so let's have a look at this. Okay. So this is a day where Tesla is trading at this price right here in this area. And if we go back to this day, we have no idea where the price is going to go from here, because technical analysis is backward looking. It's not. It's looking at the price backwards, and trying to predict where it could go possibly in the future. Okay, so if you're becoming a consistent trader and you're focusing on becoming a day trader and so on and so forth, there's a couple things that you have to realize. All right, your analysis is not always going to be right. There's nothing wrong with that. You just have to be right more than you're wrong. Okay, so if you have a 60 to 40% win-loss ratio in your trading, you're actually fairly decent. Okay, so let's have a look here, right? So on this date, Tesla is giving us a couple of information here, right? So we can clearly see that the price action, this was a high point that Tesla went to and it rejected down, right? Now, because it rejected this price point or this area right here, we're gonna start to see price start to fade here, and it's rejecting, it's bouncing, right? So what this is telling us right here is that this is an area of supply, right? So on this day, this told us that this level, there's sellers sitting here. Sellers do not want the price to go higher here. And then what we have here is we see Tesla's price continues to fall, stops falling here, right, and starts to bounce. So what this gives us a little bit more information that there is some sellers sitting in this area. There's demand that sellers want to buy in this area, which pushed the stock price quite up. But then again, it shows us that there's sellers have moved aggressively. So buyers are sitting here, sellers have moved aggressively to this area, and we're able to push the stock price back to this demand zone. So this is demand exceeding supply. So the stock moves back up, and then supply exceeding demand. Stock comes back down to the demand zone. Then you see that close below it, and it keeps falling, and it goes back to this area right about here, right? So the bigger demand zone is right about here. So this is where the stock stops and starts reversing again, right? And then it gives us another information. It gives us that, okay, sellers are sitting here now. They're pushing the stock lower, or there's or people could be just taking profits, and they push this because they're not able to push the stock back to this level, right? As you guys see here, there's something forming. This is called market psychology. Okay, so what we're starting to see pressure build up here, right? We're starting to see a battle happening between buyers and sellers consistently. Okay, so we can see this is a big zone. This is the bigger zone that the Tesla needs to get above, and then we're starting to see battles in between, right? So we see, okay, sellers come in here, they take out profit, right, and they push, right? So sellers take profit, right? Whoever's day trading, whatever they're doing, whatever their strategy is. So we set this low. So this we can mark as HL. HL represents that this is a higher low. Okay, and then we're going to go text here, and then this is a low, right? We want to see where the trend is going, right? And in the trend here, this is lower low, right? Now, what do I mean by a lower low? Okay, so you see how the stock price goes to here and it comes back. So a peak, and then this is the valley where it bounces from, right? So you see this, it bounces like this. So this is the low right here. So this is a lower low. So what this means is that this low, this is not a lower low. This is just a low for that time frame, and this is the lower low. Okay, right? So in a trend, you guys will understand that, as I'm trying to show you guys, a trend is in multiple ways. You got an uptrend, right, where the stock goes up, right? And then you got a downtrend where the stock price comes down, right? And then you have a secondary phase where we have pause or acceptance in price, or we call it consolidation or accumulation. All right. So when you're a day trader or when you're a long-term investor, these are the things that you have to pay attention to. This will all fit in together. Okay. So in a uptrend, you're gonna have a series of higher lows, right? So what we're gonna start to see is this low is higher than, let's look at this low, is higher low is higher than this low, and then this low is higher than this previous low. Okay, so this gives us that price. So this is giving us an idea of psychology in the market. So psychology is starting to tell us that price is being consistently pushed upwards. So that means supply is exceeding demand, right? So that means that if then what we can use is we can use our trend line and plot these and say, okay, right here the trend is upwards. So currently, even in our time frame that we're looking at here, this is a higher low, right? I can just clone this and take it here. That's a higher low, right? And I can take this from here and move it to here or here if I wanted to and say that's a higher low, right? So that we're consistently starting to get a pattern here, right? So focusing on this time frame. So now we have higher lows and we have areas where the stock price, moves up and consolidates. So right here is another perfect example, right? So this is where the terminology comes in, where paper hands are leaving and the strong hands are holding. Okay, so paper hands leaving and the strong hands holding. What does that even mean, right? So that means that market will shake out people who are for real, and it will reward people who are patient. So Warren Buffett says this, right? A stock market is a place where money transfers from the impatient to the patient, right? So you see how it dips and it goes up and it dips. So every dip, you have a day trader who's trying to buy over here thinking that it's going to keep going higher. But what they don't realize, as I showed you guys, in every single trend so far, we have series of waves. Stock market is a wave. If you're looking at this, right, we're getting so this is a low, a higher low, a higher low, right? And it's moving upwards. But a stock moves in waves. It doesn't move in a linear, just one directional move. Okay, so that's something important to realize and pick up on, because if you don't pick up on that, you're gonna get really confused and you're gonna be buying here, and you're gonna be selling over here only to realize the stock went up later. Okay, so I'm gonna go back to this. So now those are the fundamentals of technical analysis. It's beyond the scope of this webinar. Okay, so we're just gonna talk about how to be consistent as a day trader and not lose money, right? So going forward, so we have a higher low, stock prices moving up, and we're starting to see areas of consolidation. Okay, so areas of consolidation means price is just taking a pause between these areas and just kind of resting. Okay, so how do we identify significant areas of higher lows? Okay, so this is identified by DeMark. So if you study technical analysis, you'll hear that name. So okay, so this is a low. Always look to the left of the this candlestick and look for two candlesticks that are higher than this. So this candlestick is higher than this, and that's higher than this one, right? And to the right, it should be the same area. So that's how you're getting your V shape, right? So like you're getting this shape right here. So it's like a V, right? It's a bounce, right? This is how you identify a significant level. Now, if you don't want to be doing it but with the eyeball test, like with your eyes, what you can simply do is you can just change it to the line chart. This kind of gives you an idea too. These candlesticks represent that we were looking at represents a a bigger time frame versus what we saw on what we're seeing on the line chart. Line chart represents the average close. So once again, I won't get into how a line chart is formed versus a candlestick chart beyond the scope of this webinar. But to become a consistent trader, these are some things you can know. Investopedia is a great source if you guys want to know the differences, right? So let's just say we're looking at this. We have a bounce here. So we got two here. We got two here, right? So we're looking at this two candlesticks and two candlesticks here, two candlesticks to the left and two candlesticks to the right. So we're getting our values, right? We don't want to be just putting our lows, like let's just say we put it right here, right? This is not that significant of a level. This is just, an area where price is consolidating from trying to figure itself out. Okay, so we have to identify bigger areas versus smaller areas. Okay, so if we look at that, that will help us, become more successful in trading. Okay, so if we're looking at this, when we're at this time frame, right, we have always know that whenever a big area of supply or demand, right, so this is an area of supply where sellers were able to push the stock down. Demand is an area where, buyers come in and push the stock price up, right? So looking at this, we know, okay, sellers came in here, pushed it down. Now buyers are stepping in, right? Now, how do we identify there's buyers here? We look at something. We look at volume. So this is volume per day, okay? So this is how much volume was traded in this particular stock over the day. So if we're starting to see a consistent pattern, so every time we make new highs, we should be getting more green candles. So that means there's more buying days versus selling days. So right now we have buying right about here, right? As you guys can see in this area, there's consistently a lot of buying, right? So that's a positive sign for us. That this area there's more buyers accumulating, okay? Always know that in a consolidation area, you'll be able to find, so where a stock price trades between two range, it's considered a consolidation area. Okay, so in this area, we will be able to identify what is going on as we are looking at the majority of the price. Okay, so if we're looking at this and we're seeing, okay, there's a lot of green happening here, so possible that it could be a good breakout here. So we know that the high of this candlestick, what based on candlestick studies, is 173, and the low is 153. So this area becomes significant for us. Okay, we can just move this up here. So we see on this particular day, we're patiently waiting. We see a break of this with this candlestick, and we see a retest of this level. So this is basically sellers trying to push, or people could be trying to liquidate here, take profits, but they come to push the price to 173. You see the next day. Next day, you see the price shoot up, and it goes to supply zone. But you, as a day trader, or just a trader, you know that in this area, based on what's happened in the past, we could see some selling. But you want to wait and see if we can get above this wick, retest the wick, and then bounce, right? So that is something that we want to be able to see and test over here. Okay, so you see that bounce, and we see a retest happening. It goes below it, but it doesn't close. Remember, the close is when the body is below this. So this is on a red day. We open here, we close right at this supply zone. Okay, and then the next day we push up higher, so we closed above it. This is a positive sign that you could possibly go into a long position here at this candlestick, and just put your stop loss right here. Okay, so based on what's going on here, right? So this is what you can do based on supply. Your stop, so your risk to reward is pretty small, but you can move it as much as you want, up or down, So risk to reward should at least be 2, right? This is 2.8. This is great, right? So we'll see that this, we know what happens with Tesla, but we'll see that if it pans out or if it doesn't pan out, right? So now, with that being in mind, spotting supply zones, this is a stock forming something that's known as a characteristic. Okay, this is important to know. Characteristics, that what the stock is forming. When a trend reverses, you're gonna start to see a characteristic change. Okay, so now the simple concept I want you guys to understand is a low. Why? So this is a low. Okay, this low is lower than this low. That's why there's two L's here. So a lower low. Okay. This is a higher low. So this low is higher than this low. And then this low is higher than this low. So what that is telling us is the pressure, buying pressure, is picking up, right? And if you want to see that, you can just switch it over to the line chart. Okay. So that's what we got to look at. Now let's fast forward to, let me just get rid of this, and let's fast forward to what's going on today. This is Tesla today. Okay. So if we look at what's going on with Tesla today, we have to understand something. Okay, we just got to zoom out here, and we're gonna look at this, and we're gonna okay, so this was the previous high. So this is where the previous demand zone was, supply zone was. Now, when a level is defeated, right, that level, so if this is a supply level, now it becomes demand, because this is an area where sellers were defeated and buyers stepped in. So there's obviously more buyers than sellers here. So you can always mark it on your chart using trading views. This is trading view, and you can say, demand zone here. All right. So you know this is an area of demand. You have two levels, 943 and 901. Okay. So as long as you know the stock is above this, we're going to get to, hold off on that level pretty well. So looking at this chart, right? So let's just take our other scenario that we had. So we look at this level, we got a higher low, right? Let's just say that this is our low, because this is where buyers were sitting. This is where buyers were sitting, and they defended this zone really well for Tesla. Didn't let Tesla get below these levels and held that. So this is our low here. We have a higher low, right? And then we're starting to see another one form here, which is a same thing, right? And we're starting to see that a trend is starting to form right here, right? A trend which is upwards, right? So you see how this higher low is held, it's held, and then you see Tesla go above here. So this is our new supply zone. So this is our new supply zone up here, okay? So right below this, we have our like resistance levels. So this is where price tested. So you can set this level here that, okay, price tested this candlestick, closed, it tested this area, but it closed above. This closed above, then it finally broke down, right? Then you see how the stock pushed back above, came to this price, closed above it, but unable to go higher here. Same thing, right? So then we're gonna start to notice something here, okay? So this is a low in this trend, right? So you can mark that level as well. Okay, this is a low, and then you can change it, right? You can change it to yellow or red just to kind of give yourself a warning sign, right? And then this low is lower than the previous low. So what is happening here, right? So we know that currently, short term, this trend is down. But you see how this trend line that you draw acts as a support zone for this. So the importance of knowing the flow of the stock, it helps you find support using trend lines, and trend lines that are based on the higher lows. So this is the current demand zone, are very strong, and the more a trend line is tested, the stronger the trend line is. Okay, so talking about trend lines is I'm gonna have a course program coming out talking about trend lines and what they're all about. So you guys can kind of learn more about that. But the more tests there are on a trend line, the stronger it is. And then we have a test of this trend line, price closes sharply above it, and we have a bounce. Okay, so we have a bounce, and we see that this low was a previous. This is where sellers came in and defeated the buyers and pushed the stock price down. Now we have buyers getting above, and you see how price closes here. You can easily take a position here at this and put your stop loss, just like always. It has to be a discipline stop loss here, okay? And you can put your target to, let's just say, even here. Yeah, risk to reward is 1.9, not the greatest, but it is there, right? So if you're consistently finding that, okay, what is my trading strategy? So this is a trading strategy that I'm sharing with you guys. When price goes back above a previous low or a previous high, right? There's chances that it's going to continue to move in that direction because the stock is really starting to pick up, right? So right here on that particular day, if we just go back here and we look at it, we have price, you know, price accepting one another, right? We see that this line is being held. We see consistently when price held here, we had 2 days of buying. One day was selling, another day of buying. So buying pressure was starting to pick up here. Selling pressure was starting to get lower, and buying's entering here. So the risk to reward to take a position right about here makes sense, and it could possibly go back to this area to test that level if the buyers are strong enough, right? Why are we thinking this level? Because this is where price pushed down, it tested this level again. So that means buyers tested this. They want to go above, but unfortunately sellers are stronger than buyers here, right? and then we'll just wait and see what happens here, right? You see how the stock moves? It goes up, test this level again, so you can say, okay, this is a previous test. So people who say technical analysis doesn't work, well, it clearly does, because this is where sellers were sitting. Now they're sitting, now the sellers came in here again, and we're able to push the stock lower. And now look, we have a lower low here, right? And then we had a higher low set right about here, right? So higher low, let me just clone this, right? So what a higher low is here, it goes from here and then it bounces, right? But what we have to wait for then, once, because this overnight move happened and we're waiting for this candlestick to close to get into our position here, we see that, okay, it rejects. So compared to this and compared to that, this is a lower high. Okay, so we can just connect. This is going to be a really, like, crazy trend line, but we're getting this here, right? So we have this zone and we have that zone. So this is called a symmetrical triangle, guys. You see, this is a shape of a symmetrical triangle. So what is a symmetrical triangle, right? And give me a second here. Once again, Investopedia is a great source for this. This is what I was trying to pull up and show you guys. So it gives you an idea of what a symmetrical triangle is, a definition of it, a real world example, and how you can kind of take it. So Investopedia is a great source. So we have a symmetrical triangle happening here. We have a break of this trend line. So remember when I was telling you guys, a characteristic of a stock is important, right? So if we clone this, now we see lower high, supply zone, lower high, right? This was a previous high right here. So we see currently this level gets taken out and it goes back to test this level, unable to hold it, and it breaks down further. So remember, a stock always moves in waves, okay? So when a stock is always moving in waves, there is consistent confusion with people trading in the market. This is where money goes from big money to this is money goes from small money to big money. Okay, so people like that are day traders or retail traders, they start to lose out because what they're seeing is they bought here. They bought right here, right? So over here when we bought, we waited for this candlestick to close, right? So this was our confirmation candlestick because it bounced. This is a gap up, right? So we need to wait, or even if you got in at this candlestick right here, your stop loss is here. So you were already stopped out, right? So always wait for the next candlestick. This was a warning candlestick that it's gonna bounce. So this is, we didn't get in on this day, we got in the second day, right? So the second day here, nothing happened, right? So on this particular day where the higher low was broken, right? Price pushes through, closes below it. Second day, it goes to test it, unable to do so. So we enter a short position here, right? Short position, stop loss here. So how do we do that? So we can just mark it here, short position. This is our previous high right here, right? This is where the price rejected from. And our target could be, okay, if you're a short-term trader, target could be small as this, but I want to take my target to at least 2. Risk to reward should at least be 2. So right about here, right? And I'm gonna exit. Well, there's 2 things you can do. You can exit your position, okay? This is a trend line. There could be possible support here. So this is why I chose this target. I didn't just randomly drag this down to 2 just to make it 2. I chose this target for a particular reason, okay? Because this is trendline support, and this is where we want to be. If you're not at trendline support, if you have no reason for exiting, you're gonna be losing out and you're gonna be missing out on opportunities. Okay, so we see the trendline support and we see price closes at trendline, so we get out. All right, we exit our position here. All right, because we know it could bounce from here. But we wait for the next day to see what happens. So we know this is a lower high. Higher low has been broken down. Trend line is being tested. So next day we have a gap down and the price drastically moves to 853. Now, why would you not trade this day? Okay. Why would we not trade this day? Because this is our day where we want to wait. This is the day where we want to wait, right? So this is the day we want to wait and see what happens at the next candlestick. We see the next candlestick. Okay, it's basically that day price trades here, not a great move for the price. And then the next day, third day, it closes below the trend line again. So all right, we got this day price was undecided. It couldn't close above this candlestick, so we couldn't take a position to the upside. Didn't close below it, so we don't care about the wick. We want to see it close below the body. Okay, so it didn't close below the body, so we got really no trade here. Then the next day it closes above this candlestick, but it's red. It's more selling, but it respects the trend line. So what you can do is when it respects the trend line, that means sellers are still in control, right? So we have a peak here, right? So remember, two candlesticks. We got 1, 2 here, 1, 2 to the up, right? So we got this level, so 904. So now we know if 904 breaks, we can take a short position, right? Let's just say we do take a short position here at the break of this, or we wait for the candlestick to close. Unfortunately, in this play right now, we would have been stopped out. Okay, so that's the reality of it. Because we're in a volatile market, we could be stopped out. At this point, we could have been winning all the way down to 790, right? To 790, like, or 780. We could have been taking this trade, and we could have profited a lot of money. But because our mindset is that it's going to go down further based on a trading style, you don't adjust your trading style. You don't adjust your entries or exits. You must always adjust. Like, you must stick to your plan. Just adjust your psychology. All right, so now we're gonna take this to a smaller time frame. So and just kind of really look at, if you were a day trader, how would you look at this and how would you analyze this, right? So same concept goes here. All right. So if you want to be a successful day trader, I just showed you guys a couple of tricks that you guys can add to your tools. Okay, so let's look at Apple here. So we're gonna look at Apple, and so this is TradingView, okay? So the setup I recommend that you guys have is you can have a 3-minute if you're a day trader, 5-minute, this is what I use, and a 30-minute, okay? So, and always link all of the symbols here, okay? So that way you can always see, one chart in multiple time frames, okay? So, and the 5-minute and the 30-minute, right? So you can see that. So on the 30-minute time frame, what I recommend is you guys here take off. Actually, no, you can mark your drawings here, and you look at the 30-minute time frame. Now, what I told you guys about trends, right? Right, it's very easy to do, and this applies on multiple time frames. So what we were looking at on Tesla, this is on a daily time frame. So the bigger the time frame, when a breakout happens or a consolidation happens and then a move happens, the bigger the move. So this is the daily time frame, this is the weekly time frame, and this is the monthly time frame, right? So when breakouts happen, right, so that's why the lows and the highs on these time frames are going to be much higher, because these breakouts are followed by much bigger moves. So we have a high here, we have a low, we have a higher low formed here, a higher low formed here on a weekly time frame where everything's pushing higher. So that means even on a weekly time frame, we will get those kind of moves, right? So now so this is price telling us it's being accepted on multiple time frames. If it's being accepted on multiple time frames, that means a lot of people, so a lot of traders who are looking at this at one time can all see it together. If they can see it together, that means there's something called a self-fulfilling prophecy. So because everyone is looking at this information and their mind is in sync with your mind, the chances of the market moving with you are higher. Okay, so let's look at the smaller time frames now and see how we're going to use this. Okay, so this is a 30-minute time frame. Okay, we're going to use the same concept here, right? We're going to say this is a high slash supply zone for Apple. Okay, and then we have here, we have lower high, right? And then here is where we have our big levels, right about here, right? So this is the zone. where buyers were able to push the price up. So we're going to mark this as demand, right? And what we want to see here is, okay, this low was already set here. So we're going to set this as low, right? And then this was a higher low and it broke this level. So, right? So this was a higher low and it broke it, and this is a good down move to get to the demand zone and we exit, right? So let's look at the smaller time frame, right? So right now, currently where we're sitting, right? This is a lower high, and this high is the lower high, right? But this is gonna set into this area of supply. So this is where sellers are sitting now. Sellers have moved down and are holding that position, right? First sellers were sitting here, and now they've moved down. Okay, so now buyers have also moved to defend this zone right here on a smaller time frame. Okay, so buyers are here, sellers are here, and they're here, right? So we're gonna mark this level 2. Okay, now since we see this, we see a lower high. Not lower high, there's a higher low, sorry, higher low. And we're gonna clone this, and we're gonna, and this is another higher low right here. And we're gonna clone this, and right now, this is a higher low right about here, but it's forming. So I won't mark this right now, but this is what it is. So, and then, so this right here, sorry, this is a lower low right here. So from that to this area, this low obviously just got lower, but this is a lower high price push from here, and then we get to here, and this is another. So this is another area where we want to see, right? So, so let's have a look at this. So currently, the stock price is heading lower. So what we can use is we can use our trend line. This is on the 30 minute, okay? So 30-minute time frame, trend line is heading lower, okay? We have a lower low here. Right? And then we have another lower low. And now we see price is going to start to move, is starting to push higher. So we already know that this is a demand zone, right? So we need price to clear above. If this is going to be a bullish move to the upside, we need price to go above this level, 166, and it can easily go to 167. And then if it gets above this trend line, it can go to 170, right? So now we already have all these things drawn. So since we had everything already linked, we can see on the 5-minute time frame, okay, where we are, right? So even when you're trading on a short-term time frames, if you know big levels are being violated or big levels are going through for stocks, it helps us either hold our position for a little bit longer, or it can help us exit our position for really quickly. Okay, so if we know that the price is going to go through this particular level, we want to be ready to go long. But this tells us something, right? So this, on the smaller time frames, I use something called the opening range break. Okay, so if I go indicators, so the opening range break is by this person right here. They wrote a script on TradingView. So ZZZ Crypto 123. And how I look at it, so I use a 3-minute, 5-minute, and a 30-minute. So what I look at it on the 3-minute time frame, when I'm looking at this, I'm looking at the opening range break, and I'm using 15 minutes of trading. So the first 15 minutes. Okay, that's the same thing that's set up here on the 5-minute time frame. Okay, so this is just telling me where the price is for the first 15 minutes of trading. Okay, and however, the way I trade is I also have an EMA on here. I have a 5-day EMA on the 3-minute time frame, and I have the same EMA 5 on the 5-minute time frame. So the way to enter here, right, is obviously looking at this series of lower lows, pressures on the downside. This low has been defeated very recently, so we're gonna mark this as our support area. So which is way down. Let me mark this as So let's look at this. We're gonna make this white. Okay, that support zone is right here, right? So right about here. So I know psychologically that okay, I have a support here because this is a lower low that was defeated. Could a stock come back and test this? Okay, yeah, for sure, right? So when I got through this level, when this stock went up like this, you guys can see this is the VWAP and that's the 5-day EMA. So on the 3-minute time frame, we got above it. So the price got above the VWAP, it got above the 5-day EMA right about here. So this is where I took my first trade on Apple. This is where you can take it. And you exit when the price closes below the 5-day right here. Right? You see how it goes to the 5, but it must be on the 5-minute time frame. The entry is on the 3-minute and the exit is on the 5-minute time frame. Okay? When it closes below right about here, this is when you got out of your position. You entered about here. So this was about a 3-point move. Right? If you're trading options, that could have given you a much higher chance of success. Okay, so whenever you have this, so this is my discipline. This is my entry and exit. So identify supply and demand zones. Identify where the lows and where the highs are. Know why you should get in and why you should get out. All right, so this is how I identify it. So I'll be doing more courses, more webinars like this, talking about how we can make money from the stock market and how we can do different things. Right. So this is one strategy that I use, and identifying this, and then when you know like a big level is breached. So for example, on a day like this on Apple, right, it will reflect on a smaller time frame. Right. So this was a big level right about here. It was breached, right? As you guys can see, like you follow this and follow this at the same time. So a big level that was breached right here. It was breached the day before too, right? It goes back to retest this level, price unable to get above it, and we have a complete breakdown, right? We have a breakdown. See like this price goes below VWAP, goes below the 5-day EMA. We enter here, and hold on, give me a second here. So we enter here, and we have a bounce. We exit here, and then but you see how on this exit on a bigger time frame, it's telling you that the resistance is up here. So that's okay. You can exit here and you can start to see this selling pressure come back again, and then you have more confidence that okay, you know what, this is still going to push lower. That it has room to go all the way to here. This was a previous stop, right? So you can take it up to here and up to here. Right, but if you're stuck with the fact that you're gonna exit as soon as the 5-day EMA is closed above when you're taking a short position on the 5-minute time frame, that's perfectly fine. But there's multiple trading styles, and this is the one trading style that I use for a day-to-day trader. I showed you guys what you guys should be doing if you're a long-term trader. For example, looking at the bigger picture here, waiting for the next day candle to close before you enter your long and your shorts. Okay. So the other thing I'm going to show you guys is a quick tidbit is how to know what's going on with the market. Okay. So tracking ETFs is very, very important. Okay. ETFs represent sectors of the market, right? For example, you can use SPY represent S&P 500, Triple Q, Tech, IWM, small caps, Dow Jones, Dow Jones Industrial, right? So we have like Boeing's, JP, Morgan Chase, Coca-Cola. So XLE represents energy, right? XLB represents materials. EEM represents emerging market. We got Europe. We got treasury bonds. We got home builders. So what I do is I mark them all on one chart, and I see how they're doing year to date. Like what sectors are performing. So right now we have gold, silver, commodities, and energy. So DBC is commodities, right? And we see these are performing well. And what are the poor performing sectors? We have retail, XRT. SMH is, give me a second here, I'll just go over them here. So SMH, if you just scroll over it, it'll tell you is semiconductors, right? So semiconductors here, retail, we have triple Q's tech, XLK is also tech, right? And then what we want to see is where the money's like, so top performance is where the money usually is. The low performance is where the money is usually leaving. Okay, so if I look at this, right, how do I find stocks that are trading or that are trading an uptrend, right? How do we find stocks that can help us make money based on where the leaders are. Okay, so this is one way to track that. Have all the separate indexes. Another way you guys can use is there's Finviz. It's completely free. Okay, Finviz. Right, and you just go finviz.com. Okay, they have a lot of stuff here. So they have groups, right? So the groups tells you what sector has been performing well year to relative performance, year to date, 1 year relative performance, half a year, and so on and so forth, right? And then you can click on each sector, and then you can find stocks that are listed here. So typically, when I look for stocks that are listed well or are the top stocks, what I do is I look at this sector, I look at this, I go to country, United States, I like to trade the North American market. I want stocks that have options and that are shortable, and I want a C stock that is over 2 million, okay? So now, if I'm using this to scan, I want to look for, so average volume is also over 1 million. And so this is what I look at, right? And so you can filter the market cap. So if you want small cap, you can look at that. If you want large cap, you can look at that. So I usually focus on large over 10 billion. So I look at the big stocks, okay? And then I look at technicals, right? So under technicals, this is important to me. If I want to see a stock moving upwards, price above 20-day SMA, above the 50-day SMA, and above the 200-day SMA, right? Now, talking about SMAs, I will have more videos coming up, and I will have courses out here that are going to talk about SMAs, why they're important, and how we can use them, right? So if we look at this right here, price above 20, 50, 200. So this is telling me, let's just look at AA, right? So this is telling me AA is doing really well. What is it? It's aluminum, right? If aluminum is doing really well, aluminum is a commodity. So it makes sense. Commodities year to date are up 12%, right? So let's look at the stock of AA, right? So if I wanted to have a look at the stock and see how AA is doing, well, it's doing really, really well, right? Price action is confirming here. We have a series of higher lows, right? And the stock is moving upwards, right? So that makes sense, right? Let's look at the next stock here. A CF, right? Agriculture. Makes sense. Agriculture stocks are going to do well if commodities are rising, right? Look at this stock, right? So we have CF, we have series of higher lows, right? And we have higher highs, right, in a trend. And we got a price channel here, right? So stock is moving like this, and at the same time it's moving like this, right? So we have series of highs that are getting higher, and we have a series of lows that are increasing. So this is a bullish trend. So we can be bullish with this. Now you guys know about the market psychology: higher lows, higher lows, higher lows, higher lows, right? Higher highs, higher highs, higher highs means the stock is grouped together where it can continue to move higher, right? So Finviz is a great tool for that to happen. Right now, if I wanted to, give me a second here. So if I wanted to watch and wait for the stock to dip or for it to get lower or something, right? I could do that as well. So if I wanted to find stocks that are falling, I can just do price not above, or we can just do price 50 below the 20 and the price is below the 200-day, right? And I can do descriptive instead of basic materials, I can do any, and large cap. So this is telling me not all these stocks who are bearish right now. Bearish means stocks that are coming down. Okay, so let's look at the first one, Ali. So Ali is starting to look bearish. Why? Because stock is not able to make highs. So we have a low here, we have a low, then we have a lower low, right? So trend is starting to change here. We have a supply zone up here, which is the high. Right? And then we have lower high. Right? So trend is starting to change. It's starting to come down. Right? If trend is starting to change and it's starting to come down, then we really don't need to be bullish on the stock. We just need for levels to break. So bullish means you want the stock to go up. Bearish means you want the stock to come down. If we look at this, we're like, okay, this is a level where it went to and it rejected, and its big support level is here, and now it's got another support level here, right? So it bounced. So if it gets below this level, it could be a good opportunity for a short, right? And yeah, and then you can continue back and forth like Boeing, right? CCL. This just gives you all the stocks that are possibly could go lower, right? And then it's interesting because if you look at this is in financials, this is in aerospace, right? So you got jets. Jets is aerospace, and this is in asset management, which is also financials. CCL travel services, so which is retail, right? So if we look at then we look at the stocks, right? We look at the ETFs. It makes sense, right? Jets is low, so jets represents the air, like travel and all that. Retail right here, right? So financials is XLF is financials, and they're underperforming for the year. So as we can see, stocks move in a basket. They move together. They move in a group. Okay, so if we know what's moving up versus what's moving down or what's starting to change, we can observe this right here to tell us that. All right, guys. So this is how you can become a consistent trader. You guys got to add to your analysis. Look at the ETFs. Look at the sectors. Look at the stocks and look at the stocks that are moving up in that sector, and wait for levels to break out. Wait for confirmation to come in. Wait for your entry and have a discipline, right? Don't trade emotion just because. Like for example, just because you're trading Tesla or you're trading Nvidia, you like to trade tech stocks for whatever volatility or whatever reason, know what you're entering and know what you're exiting. So if you short it here, you know you're going to exit here. Okay, you made a profit. But if you went long here, you made a profit. But if you went long here and you sold here, you lost money only to figure out that it was going to go higher. So when a stock starts moving very, very parallel like this is where people tend to develop something called FOMO. Right here. FOMO will happen, and then instead of making money, you will lose 15% here, and you will exit only to realize that it was going to go higher. All right, guys, so that's enough for me from today. I hope you guys enjoyed it. If you did, please click on the like button, and also, if there's anything else I can, do for you and you guys want me to see, leave it in the comments below. I'll make more videos in the coming days, and if you do need help or you've suffered in the markets or anything like that, this is our website, technicaloptiontraders.com. We do have our Discord community. We do have our one-on-one mentorship programs that you can sign up for if you like. Or if you have any questions, I do have a contact page at the bottom. You can fill out your information and just reach out to me if you just want to have a conversation about how your day or time has been in the markets. All right, guys.